Check. Perfect. Good afternoon, everyone. Delighted to have you here and to moderate this panel. Today, can I have another mic, please? Hello? Perfect. So today we have the perfect panel to discuss, who are at the right at the heart of the subject. Gentlemen, thanks for being here. Sameh, Harith, this is your second time here, so thanks for making it again. As I said, I'll be directing questions to each of you, but feel free to build on each other's answers. We'll keep this a conversation, and if time permits, inshallah, we'll open up to a Q&A session at the end. Okay? So, first off, Sabri, I'll start with you, please. From a Treasury perspective, what dimension of diversification do you see as most critical for optimizing growth today?
Bismillahirrahmanirrahim. First of all, thank you very much for Standard Charter SADC organizing this important event. This is the second time that I am joining the event, and I see that 12 countries, many different colleagues, new colleagues, ex-colleagues, that it's an occasion to meet, exchange ideas. So when it comes to the question of dimensions, so each dimension, products, geographies, funding sources, I would like to add regulations, it's very important, present actually opportunities and also the challenges. In our current global environment, some of them weigh more than the others. You asked me about the Treasury perspective. Obviously, from Treasury perspective, source of funding or diversifying funding is one of the fundamental aspects of managing the liquidity. So, diversifying funding provides stability and also a base to build product, to expand in the geographies, to have diversified investors, and also meet the regulations, and most importantly, mitigate the risks. Concentration risk, liquidity risk. I don't want to say interest rate risk, but we have the funding or cost risk. So from Treasury perspective, diversifying funding is one of the main aspect of having the growth, same time sustaining the profitability and mitigating the risk. So if we have a robust and diversified funding sources, we can build the products, we can expand digitally and physically. So now the phrase is the phygital. So that is very important. Also, sustain the profitability. And same time, having enough liquidity, diversified liquidity, will manage the cost of funding according to the budget, according to the current market environment. So when we look at the Islamic financial institutions, slightly differ from the conventionals because unfortunately we have limited source of liquidity. We have limited source of counterparties. We have limited products to have to manage our liquidity risk. From that perspective, when we look at, therefore, we need to look at a well diversified funding sources, well-established internal and external documentation. You also need to have an excellent relations domestically and globally. So also products are very important. Having just a short-term product will not survive managing the liquidity risk. Therefore, funding sources, diversified funding sources will provide extending the maturities, extending the currency ranges, not just domestic or US dollar. We were talking since morning. It is not about the US dollar anymore. So we need to go beyond that. So therefore, Treasury perspective is the funding sources.
Thank you. And Harith, you wanted to mention something?
So first of all, I'd like to start by thanking my fellow panelists for partaking in this session. I think all of them bring to the table a wealth of experience and diverse backgrounds for different regions. If you may allow me to start just with a prelude, not necessarily an answer to the question, but that can set the foundation to topics that might be discussed later. We operate in a region where the two larger economies, UAE and Saudi, sit on opposite sides of the spectrum when it comes to liquidity dynamics. UAE benefiting from investor flows over the past few years, credit growth at 6%, whereas deposit growth sitting at 12.5%. Excess liquidity in the system is north of 300 billion dirhams, versus the Kingdom of Saudi Arabia, which embarked on the 2030 vision journey over the past few years, naturally resulting in a need for liquidity to fund projects and initiatives. Reason I'm mentioning this is to highlight that cross-border opportunities do exist in the region. However, the ability to capitalize and exploit these opportunities can be hindered by divergent interpretations to Sharia standards, and also the lack of standardization of documentation and so on and so forth between jurisdictions, even in the same region, which can result in misalignment and missed opportunities. And case in point, so for example, if you look at the regulations in the UAE, the requirement or the regulatory requirements in the UAE is to have adherence to AOFI standards, which may restrict the ability investment in sukuk for conventional and non-conventional financial institutions. Hence, the requirement of standardization, I think, is a topic that needs to be addressed regionally and globally in order to bring about connectivity and cross-border opportunities.
Yeah, and no, absolutely. Thanks for that. Standardization is a topic we'll definitely discuss and get to. But thanks for bringing it up. Sabri, I'd just like to go back to you because I think you mentioned the investor segment, and it brings me to my next question, which is, what trends are you seeing in the investor space for sukuks? Whether it's by tenor, by structure, by rating, are there types of sukuks or structures are consistently in demand, or are there structures that are typically overlooked? For example, ESG. What's your view in this?
We are relatively a young bank, actually, in Turkey. We are only a 9-year-old bank, where we are in the midst of establishing our first sukuk program. We were debating at the beginning whether we just have a straight through sukuk, no ESGs, no sustainability, no tier 1, tier 2 aspect. We thought that we are spending all these efforts and we are seeing a tremendous appetite from investors, especially after COVID. They want to see more social governance, more social, more supporting the global economies type of debt instruments. So we decided to go ahead with covering all these aspects. From a Turkish institution perspective, we are seeing clients mainly on the short term to medium term. Also, limited appetite for long-term sukuk investment. We are seeing appetite from investors for syndicated transactions and club deals. It is all about the liquidity, it is all about the pricing and the risk. So from our perspective, ESG is one of the fundamental investment product that investors are looking for. And short term, medium term is the key, especially 18 months, 3 years, 2 years, 5 years, tenor, most profitable one. And US dollar still is the king. And that is from international perspective. From local perspective, obviously we are issuing sukuk domestically, mainly in Turkish lira because of the regulations. Those are typically 3 months, 6 month, 1 year transaction on a rolling basis. Actually, we are issuing a sukuk for our investors. We call sophisticated investors. We say 3 months, but usually it lasts 5 years, 6 years, 10 years, because we keep rolling it, dependent on the local environment. Also, what we are seeing from sovereign side, again, domestic issuances and international issuances. Domestics are usually 1 year tenor, and international mainly 5 years. Again, even we are seeing at gold-denominated issuances, we have a huge appetite from investors to purchase gold certificate with a return. If you look at today, you know, anyone buys the gold, whether it is ETF, whether it is digital, whether it is physical, you don't see any return unless the upside of the, you know, the underlying asset. Top of that, we are giving a return to our investors from Turkish participation banking side.
No, I mean, it's great that we're getting the Turkish perspective here. And I think you've defined what diversification means. But as you know, diversification needs active trading to support it. It needs liquidity. So I think my next question is to Sameh, actually, is how do you assess liquidity and the depth of the sukuk market today? Is there a secondary market? I mean, most people talk about the sukuk market. They think buy and hold. Has it changed?
Okay, first of all, I would like to thank Standard Chartered for this event. I'm a heavy believer that this event actually affects the market because, you know, it's a closed-door event. It's very important for that. And it brings practitioners and to a room and we can discuss everything. So I've been on this panel before, and you guys know I'm a bit open about any discussions that we can discuss. Open. First of all, I think from a trading perspective, it's not buy and hold like before. And I would give our own example today that as a bank, and a couple of years ago we were a bank under conversion, now we're a fully Sharia compliant bank, and we've been running that way for more than a year. We are building a sukuk trading book now because we think there's a gap in the market there. The gap is because there's a concentration in the sukuk. The concentration is certain names, certain maturities, and specifically certain structures. So I would say 5 to 10 years is where everybody's there, and these kind of maturities, you don't see anybody selling them. They would like to hold them on their books. They would like to have ijara sukuk is the majority that people are comfortable with, and then hybrid sukuk, which have an ijara element to it again. And then it's been very, it has changed. You've seen, let's take the non-investment grade first. Non-investment grade, there's a huge gap between the conventional issuances and local the sukuk issuances, the Islamic ones. It's purely because there is a appetite for Islamic assets and there is not enough assets there. When you go to investment grade, this has converged. So pricing has come closer because there is trading, but still not where we want it to be. A small ticket moves the market. And by small ticket, I mean 20 million ticket on certain issuers moves the market. We were used to before, as a conventional bank, executing 250 without going through any issues. Today, you go to your trader and you're like, listen, I have an order for 20 million. Keep it hush-hush. We're not used to that. So I think still we are not where we want to be, but trading would know better. But I think the market is becoming more mature. It's converging to where it's supposed to be. Pricing between the sukuk and the bonds are coming closer. We've seen it in Egypt, for example. Once they came with sukuk, we've seen how the yields have come down. So the market is going there, and there is more appetite on sukuk. We see new investors coming in, which previously used to do only conventional. I think that they see it as ethical investment. It is part of the green and sustainability. So all of this mix is giving us better liquidity in Islamic. And I think this is something we want to leverage on eventually.
Yeah, I think as well, it's good to see that in Q1 there's a lot of activity as well in the issuance space. Like, for example, ADNOC and also I think Rajhi recently issued. So yeah, Harith, would you like to add something?
I mean, I agree on the most part with what Sameh mentioned, and I think basically in the sovereign space, liquidity has definitely improved with varying degrees. Potentially on the corporate or credit space, there still is a lag there because of the haphazard nature of issuances. But nonetheless, there has been improvement. And, maybe focusing on the local currency space, I could attribute some of that improvement to the push from local regulators and local monetary institutions in the UAE and Saudi in developing the local markets by initiating and developing primary dealer programs, which have definitely had a positive impact on the liquidity, especially on the sovereign side, and local currency primary and secondary markets.
No, thank you. And I think you both alluded to pricing, which is my next question here. How do sukuk stack up against conventional bonds in terms of pricing and relative value? I think what we see in the market is there's always a slight premium. Is that still the case? Or has it changed slightly? Sameh?
Yep. I think from our perspective, it's still the case. Islamic, there is two things. One, there is huge demand on Islamic sukuks. On the secondary market, for example, you'll find Islamic sukuk pricing. There is a difference. Ultimately, we would like to see the conventional and Islamic converge if there is one issuer. But that's not the case. It's becoming closer, but not yet. And I will split this into two. If we take local currency, for example, in Bahrain, local currency, we don't have a difference. In Islamic or conventional, we used to have a difference before, but our central bank has been very active in coming up with products. We have murabaha-based 1 week, 1 month deposits. Previously, this was not there, and this is by the help of Bank Salam and us working with them. And then you have sukuk salam 3 months, and you have ijara sukuk 6 months.
Salam is the central bank.
Is the central bank issuances that they do. So from a local currency perspective, we don't find a difference. When we go to the dollar ones, and again, Bahrain is looked at as non-investment grade today from outsiders, you'll find a differential in the pricing. And still, that differential is there between sukuk. Now, there is a lot of things that goes into this. One, there's a demand in sukuk. Two, structuring of sukuk is not easy. So you will always find that differential, and we'll go into structuring of sukuk. I think the hot topic of everyone would be AOFI 62 and so on and so forth. We're going to discuss this at a later stage, but I think the differential in pricing is there, but it's becoming closer, again, because of the liquidity, the trading, the market size, the market depth. Bahrain today, for example, 55% of the market now is Sharia compliant. I think everybody's trying to move there. They just talked about the news out yesterday in UAE that the market needs to grow. All of this will contribute to bring the markets all together. We don't want to be in a situation to say Islamic, conventional. We want to say market. It's easier for us to be able to manage our own balance sheet when we say markets. When we still talk about them in differential and pricing is differentiated, it's not the same market that we're talking about.
Absolutely. Hanif, please, I'd like to bring you in. Do you agree with that view, or are things different in Malaysia?
So I think in Malaysia we slightly differ in terms of what we see in the market. In fact, I think, and it has been, we've seen this transition in the last 10 years. The pricing for sukuks in local currency in Malaysia is a lot tighter than conventional bonds. And this, in the past, it used to be Islamic spreads were wider. But as the markets became more and more developed, as funds became more and more conscious of the usage of their money, and as more funds went into the Islamic space, we saw demand for Islamic assets causing spreads to tighten. And in fact, in the last few years, because of the Islamic push towards the ESG agenda, driven by Bank Negara Malaysia itself, we've seen sukuks embedded with sustainability agenda even issued at even tighter spreads. So it's so much so that if you are a Malaysian corporate and you raise funds in the conventional sector and you are a non-ESG friendly participant, your spreads, regardless of where your credit rating is 20 to 30 basis points wider than if you had issued in the sukuk market. Right? So I think over time, as the market develops and as the investor segment appreciates and understands the importance of the Islamic sukuk issuances, we should see that gradual shift. And I think a lot of it is driven by the regulators. So we in Malaysia, Bank Negara has started issuing the even sustainable government issuances under a Lestari program, and they've also paved the way for the market by issuing US dollar issuance under the Malaysia SDG Sukuk framework. And this framework is important that it is aligned to green bond standards of ASEAN and the capital market associations. So I think, like we said, the trend, I think I just want to touch earlier on the question on trends. Definitely, we, in the Islamic space, sukuks, we are embedded with the concept of sustainable. It's embedded in our religion. So combining that with our natural elements of the sukuk, that's the path that we see going forward. And at least in Malaysia, that's the path that we see, the trend and the demand is there, especially as funds, they have asset allocation requirements. So the faster the Islamic space capitalize on this marriage of convenience with the ESG space, the tighter the spreads will be and the more the demand, and we trap this liquidity inside the Islamic space. So I think we have that leg up versus the conventional.
Okay, so I mean, I guess what I hear is if you want cheap funding, make sure you structure an ijara sukuk and make sure that's ESG linked, right? So I think I'm glad that you've both painted a rosy picture. What I'd like to talk about now is shed some light on the headwinds that may come, one of which is the AOFI Standard 62. So Sameh, this is your favorite topic. Would you like to kind of have an overview of what it is and its impact on the market?
First, it's not the favorite topic. It is a topic. Yeah, it's less favorable topic, but it's a topic, and I think I see the faces of the people. I think, first of all, I would like to start, before talking about AOFI 62, I think the example in the industry is, and it's good to have everyone here, is the good thing about Islamic banking, Sharia compliant banking, or Islam in general, people don't give up. And that's a good thing. I'll start by saying that. And the example is always given in repo market. When repo market was developed in Islamic banking, you had the collateralized murabaha, no title transfer. Everybody had an issue with it. People didn't know how to use it. Tri-party, then people started having their own custody and you transfer it to them. Then they did title transfer repo under the same documentation, and Saudi came with double wa'ad in a way. So people did adapt to the market. Now, AOFI 62 will not kill the market, let's say. Everybody will not say it as it is, but it will not kill the market. It is a hot topic because we are changing the way we're going to issue sukuk, and I just said that one of the most popular sukuk is ijara sukuk. And the way you're going to change it from asset-based to asset-backed, it makes it heavy. There will be dependency on the asset return. You have to embed mechanisms into it to give the final return. You don't carry the risk. So it is a bit heavy. And I will not talk about AOFI 62. I'm sure everybody had enough time to discuss it. Everybody wrote memos to their management. Everybody wrote memos to themselves. And everybody is doing their CVs because a lot of people want to run away from Islamic banking because of this. We're not supposed to go there. There is mixed messages, and we're supposed to sit together and find a way to discuss, and we need to think about every aspect. Today, my question was to someone, like Muhammad was sitting, and he worked a lot on AOFI 62, and my question was, how will it impact repo, for example? So we don't only think about the issuers or the issue itself, but if we want to repo it, how can we repo it? Is there an implication on repo? We never discuss this in every forum that we used to discuss. We're just discussing, can the assets be transferred? Yes, no. But that's not the only question that is there. AOFI 62, I think, ultimately with the industry, and it is a hot topic, and they are discussing it, ultimately we will reach to somewhere that is doable, but the market and has to find the way where we're going. The issue is not only AOFI 62. The other discussion that has been done recently, I'm looking at certain countries that are saying this is an opportunity for us. People who follow AOFI, UAE and Bahrain, for example, will not compete with us. No, but you need the whole market. You don't need competition. It's not a DCM that's getting a mandate. It is, you need the whole market to be able to buy these assets. You don't want a divergence in pricing. We need to have standardization more in Islamic banking. I think the good thing about Islam is its interpretation. I am a firm believer that we are supposed to read and interpret it. But in banking, we need a bit of standardization. So things like this is very important for us. So HSA, for example, came up preemptively with a regulation similar to AOFI 62. So now we are unclear. They have a different grandfathering period. AOFI has a different grandfathering period. This impact in the market is destandardizing the market. Are we trying to do that? This is what the industry needs to answer. Listen, if AOFI is the rule, let's follow AOFI. I'm not saying let's go against HSA. I'm saying that we need to question what shall we answer. We will not be able to answer every question. Everybody was looking at AOFI, and then when we came to some UAE banks, and they're like, HSA said May, it's not September. Their grandfathering period is anything that is before November. And again, it's unclear because not everybody gets that memo. So the market needs, one thing which is needed here is clarity, standardization, more open discussions. AOFI 62 will not kill the market. I think we should understand the core of it and we should question it. I'll give an example of us. The blue elephant in the room is always Islamic wrappers. When you talk about Islamic wrappers, we sat with the banks in Bahrain, discussed Islamic wrappers. We went to every Sharia board in the banks together, collectively, discussed it. We came up with a product, sent it to our regulator, and we have something similar to a wrapper approved by the regulator to do our liquidity. It's not a wrapper, it's a murabaha linked to a portfolio. The portfolio could be 33% Islamic, 66% conventional. And this structure was mainly done to manage our own liquidity because there is not enough assets to be able to issue sukuk, because there is not enough sukuk to be issued. There is no sukuk salam cannot be transferred. So in the interim, not to kill the market, we came up with this product and it's approved. Now it's up to us to utilize it or not. But the industry needs to sit down, find solutions, and the first line of answer should not be, we've spent a lot of time on this. We know we've spent a lot of time on it. And I think it caters to the Islamic banking, but we need to make sure what are the implications, because it has become a deep market now. We see the trend in Islamic banking. A lot of banks want to convert. A lot of banks are coming to the market. We as a bank today, we are the second largest Islamic bank, and we are trying to grow. And by growing is acquiring conventional banks and converting them. That's what happened. It's a new trend, and it worked very good for us, and we want to do that. So I think AOFI 62 is a topic. Again, we don't want to be stuck with it itself, but the most important question to me is, are we standardizing the market or not?
Yeah, and I think the market is lucky that, if it does come into place or become effective, it wouldn't be retrospective. You mentioned the grandfathering period. I think Sabri or Hanif, would you like to add on the AOP, or do we move on?
Maybe I can just say that we have to be optimistic. Okay, we are not in 1975, 80s. We are in 2025, so we have so many Islamic finance experts from banking perspective, accounting perspective, legal perspective. I'm sure we will find a solution for these IFRS standards.
So Sameh mentions de-standardization. Let's continue on this theme. And I want to expand on standardization. Luckily, we've got panelists from Malaysia, Turkey, and the wider GCC. So I think the next question I'd like to start with Hanif, if that's okay. How does regulatory or Sharia interpretation affect your ability to operate across borders? What kind of standardization would meaningfully support diversification?
Yes. So we've seen the Tahawut Master Agreement, right? And that was a great development for the Islamic markets because for a long time we didn't have an equivalent hedging products across the Islamic space, right? And the Tahawut came and it standardized. That came out as a form of standardization, and where banks, I could deal with Standard Chartered. I could deal with somebody on a standard documentation, right? And the product was widely accepted, and that standardization then allowed banks to then hedge their portfolios in derivatives or they manage their portfolios through these products. So again to what Brother Sameh say, are we standardizing or are we not? So the benefit, what I think, if this panel, or the conclusion that probably this panel is trying to say is that there is more benefits to the standardization, and there's more benefits to having these conversations, a lot more of these conversations, because we already operate in different jurisdictions, in different borders, and that already creates a lot of issues to transact, right? So standardization across all the jurisdictions, with efforts through efforts like the Tahawut Master Agreement, allows Islamic banks to flourish even more, right? Because it allows us to manage our risks, as our brother Sabri said. It allows us to manage our liquidity risk, right? And Brother Sameh also touched upon repos. We have double one structure, we have collateralized commodity murabaha, we have the SBBA structure. But even throughout all these many structures, right? Islamic repo volume has already increased from in just 2024 in Malaysia, it has doubled from 12 billion to 42 billion, right? And this we saw was because Bank Negara saw that this needed standardizations, and they issued policy documents for collateralized transactions. So with that issuance with a regulator taking control of the standardization, the market flourished and easily more than doubled the volume. And the facilitation of that standardization in just this repo market, it allowed Islamic banks to then increase their HQLA assets. It allowed the Islamic banks to then buffer up all their their liquidity reserve requirements, and that necessarily means it allowed them to lend even further to corporates or even the retail segment because of the high liquidity buffers that they generated from the Islamic repo transactions. So there is great benefits if we cut across all the products that we create, if we cut across all the borders that we operate in, and standardize and standardize our interpretations, because Islamic banks will then just latch on all the standardizations and clarity of thought, and then we are able to then, because the trend is clear. More conventional banks and more banks that we are operating, they want to be more Islamic, right? They want to be more Sharia compliant. The demand is there. But we just need to ensure that the road is not filled with many options. It should just be one straight highway.
Yeah, I mean, I think you're absolutely right. I think the TMA has been quite successful, actually, and that's kind of helped a lot of banks satisfy their hedging needs. I think I think to move on to funding, I think the Islamic repo market is not as it's not as consolidated. It's actually fragmented. So, I mean, Hanif, just quickly back to you before I move on to Sabr. How are you meeting your liquidity needs? What kind of repo facility are you currently using?
Yes. So, like I said earlier, and also the other panels have spoken about this, is that there has been increasing usage of repos, Islamic repos, and the trend continues as well in Malaysia. And the good thing is that it also allows, with the product diversification now includes cross-currency repos. So it allows us to then, even Malaysian banks now have access to non-ringgit funding by collateralizing our Islamic onshore Islamic assets. And there are already now usage of repo to maturities, extendable repos, and before, this allows a different way for us to manage our portfolios. We can now think of long-term funding. We can now think of managing foreign currency exposures. And so apart from repos, we've also seen the usage of total return swaps, which are a little bit more complex, but because of the standardization in the Tahawud Master Agreement, we can now come up with structures that allow banks to enter into total return swaps, where it is a form of funding rather than just being seen as a form of derivative. It allows banks to fund their portfolios for assets that they usually cannot get the exposure in, right? So, and this also comes because we have like I said, the standardization in the Tahawud Master Agreement, right? And also lately, we also have the standardization in the Islamic collateral support agreements, right? So, this standardization greatly benefits liquidity, greatly benefits banks' hedging facilitation, and allows the Islamic market to flourish.
Sabri, please go
What
ahead.
I can add to Brother Hanif's comment is, I must admit that 6-7 years ago we were doing a repo transaction in a year, maybe one hand. Today, repo transactions literally we are doing every day, whether it is domestic or international. International is less, but the frequency of the trade, even with the international counterparties, are increasing. We have some TRSs, we have short-term repos, we have this renewable repos as well. We are doing with international counterparties, we are dealing with the clearing houses in Turkey. So you don't have the counterparty risk, actually, the risk stays with the clearing house. We are doing with our domestic corporate clients, reverse repos. So repos in our DNA now. Number one, purely for creating liquidity. Number two is actually catching the arbitrages. If we see an asset with good yielding, if we can fund that one below the return of that asset, that is the intention actually doing the TRSs, would be great for Treasury and for the institutions. But as I said, the standardized effort of IFM with the support of banks like Standard Chartered and others are very, very important. And touching on, based on the previous question, I think the regulators has to play a key role, and the central Sharia board of the countries. I'm not talking about my Sharia board, your Sharia board. Is the central Sharia board, rather than causing issues, actually how they can put the effort together to come up with a globalized, acceptable, Sharia-compliant standard would be key for repo type of transaction and others.
Sorry, Harith,
Yeah, can I just add to that? I think my brothers have touched base on the depth of the market. And I think that is all the investment of the subject matter experts to reach the market where it is. But again, I just need to add one point to this. I think the liquidity needs is being addressed today. There are structures that you can enter into to add to your liquidity. It helps you. As a bank that has been converted recently, I mean, we have went through the whole lot to understand how can we operate or how can we have our business license to operate as we used to be before. And I think it's wrong for us to think about where we were and how we would be. We should think about where we're going because now we're fully Sharia compliant. But when you do repo, for example, yes, there is a repo market. It is in depth. I give my hats on to everybody who does Islamic banking here because it's not as simple as conventional banking. When we used to do conventional banking, repo was repo. In Islamic banking, when I say repo, they'll tell me it's title transfer, no title transfer, double wa'ad, title transfer.
With no rehab.
With no rehab, no title transfer under a custody with ourselves, no title transfer with tri-party. Guys, it became too tough. We have to reach to an agreement because then you go to collateral. So again, the TMA has a collateral support deed and they ask you, do you get a profit on it? Yes, no, no, yes. Spot murabaha, investment account. So it is a bit heavy, and this heaviness makes it complicated. People shy away from transactions. Not everybody enters into them. I think it's time to partner up, standardize, and we are one of the biggest supporters of IAFM, and we think that's a body that we need to invest into, and we said it out loud. Let's do an analysis of the market. Can we standardize double wa'ad? If the answer is yes, we'll spend on it. This is something that the market needs to do. I think it's time for us to be able to have one discussion. I get calls. I had a call today morning, and he's like, I want to do repo with you guys, but he doesn't want to do a title transfer. He wants to do it no title transfer, and he was asking about a UFI. It becomes tough. We don't know which documents we're sending, to be honest.
Yeah, absolutely, and we deal with the same issues here. Harith, you want?
I mean, I'd concur with what my colleagues here on the panel mentioned. I think in terms of attainability and availability of products, definitely they are. And it's refreshing to see that our colleagues in Asia and in Turkey are seeing a huge upside in terms of the volume of repo transactions in Islamic format occurring. I think the shift in liquidity dynamics paradigm here in the region, specifically in Saudi, has prompted financial institutions to seek diverse means of funding and freeing up balance sheets. I mean, we've witnessed in the recent years the tapping into unconventional, if I may say, structured financial solutions, such as the repo to maturities, which were uncommon in the region on local currency, and TRSs on loans, and so on and so forth. And what we've seen is that these have begun in conventional format and naturally morphed into Islamic products. And I think we're all going to see more of this, especially with the expansion of mortgage portfolios and potentially more supportive regulations to support asset-backed securities and packaging into special purpose entities, where we might see a further development in this. But as my colleagues mentioned here on the panel, without standardization, attainability is there for the products, but practicality of usage might be a deterring factor for the further expansion of this market.
Yeah, perfect. I think, look, I completely agree. I also think, in Saudi, double wa'ad was a huge success. UAE, they're going to launch the double wa'ad soon. So developments in one market is being transferred to another market. So there is some standardization happening. But I'd like to move on to the next topic, actually, to the big enablers and the big disruptors. Sabri, I'd like to start with you, please. Do you see technologies such as tokenization, digital issuance platforms or blockchain as a path to diversification? Or is the regulatory or operational hurdles just too big?
We see these platforms offer transformative opportunities to enhance diversification in Islamic finance. Obviously, these innovations can broaden investor participation by lowering the barriers to entry, increasing the liquidity in the market, and enabling the cross-border access to Sharia-compliant instrument. Additionally, blockchain's transparency efficiency can help reduce the cost while ensuring compliance with the Sharia principles, fostering trust and unlocking the new product development opportunities such as tokenized sukuk, real asset-backed instrument, etc. However, there are several significant challenges must be addressed before these technologies can achieve the widespread adoption. I mean, when I moved to Turkey back in 2020, first product we did, it is called GFT, Guaranteed Fund Transfer. We wanted to digitalize the guaranteed letter issued to the customer and the checkbook. We said we will not give any paperwork anymore. We would like to do everything digital. So it took about 2 years to develop this. We even questioned by the central authorities, are you creating a digital currency without our permission? And we try to explain to clients maybe five, six times, saying that, look, it is kind of a tradable instrument. It is like your bank account. How you move your Turkish lira from one account to another account, this is very similar. But unfortunately, it requires a lot of educations. But what we are seeing last 1 or 2 years, clients started accepting that. It's becoming so popular. And I believe that digitalization and this kind of blockchain technologies will offer an opportunity, domestic and international diversification.
Sameh, did you want to add something to that?
Just being mindful of time as well, I think on technology, 2 things that I would say. First is, I think it's time to embrace it and use it for Islamic. I think there was a panel on transaction banking, and I think that has more on technology side, and it impacts us as well. And the first thing I would say as an example of technology and use of technology is the first thing when they told us about IOFI 62, we thought about using tokenization. We said if we have assets, we'll tokenize them and sell them across. So I think tokenization needs to be used, and the market has to adapt that. And the second thing, technology needs to make our lives easier. I think when we entered into the Islamic banking space, we are partnering up now with a platform. If you transact a PRS through that platform, the platform will ping the commodity brokers for the commodity amount. So what happens, it reduces your operational work. You don't need to calculate your commodity amount. You don't need to go directly and buy them. The system by itself buys them, sends them to you. You can press accept, or you can let it straight through. Some Sharia needs you to send accept. It's timed when you receive it. So it automates all of this. When we worked on this with the technology company, the whole purpose was because when we converted, we went to one of the banks, regular bank that we go to, we said we want to do a PRS. He said we don't do PRSs because it's heavy operationally. So I think technology needs to be used, specifically that in Islamic banking, operationally we are really heavy. So I will not even jump to let's use blockchain, let's use the basics. Let's automate the commodity transactions as much as we can. Let's use the tokenization. Let's see how can we streamline the market from the documentations that we are using today.
Thank you so much. I think just to summarize, I think it's clear that diversification in Islamic finance is no longer nice to have, and I think it's essential for us to ensure that the market remains relevant, resilient, and responsive to global financial shifts. So with that, I conclude the panel. I'd just like to Please, if we can start the Q&A session. I know last year we went overboard, so we wanted to give some time. Do we have any questions to any of the panelists on any of the topics that we just discussed? Any questions? Can we just get a microphone for this gentleman, please?
Assalamu alaikum. Khalid Turki, Lehman Bank. Just a small question out of curiosity. If we're noticing this move towards implementing netting jurisdictions in all around GCC, Saudi's on the way as well too. So I would really be happy to hear, do you think this would have an added value from an Islamic banking perspective, or it just reflects in the same way as it reflects to the conventional side of things? Thank you.
See, I think definitely it adds value. And I wouldn't compare it to conventional because I'll tell you my experience. A TMA and an ISDA, both of them are under ISDA. So TMA is ISDA in a way. And we faced a counterparty once who came and said, we have clean netting jurisdiction for Bahrain under ISDA, but we don't have it under TMA, which is a bit confusing to us. I think it will help the industry when you have it, because honestly, we faced this before, that somebody came and said, we have it under Islamic and we don't have it under conventional, or we have it under conventional, we don't have it under Islamic. I think netting jurisdictions help. It makes it better for us if jurisdictions are clean here, that we can face the market directly. We face this under different entities. As a bank, we are one of the most spread Islamic banks across the world. So we are not centric in one place. So in Kuwait, for example, sometimes they came to us, some counterparty says, we don't see it as a jurisdiction, we don't want to face Kuwait, we want to face an SPV. It just adds complications for us. When you bring an SPV, you need to write a guarantee, you need to go to board. It's not simple. Going to people and saying, I want to write a guarantee, they'll say, why they wouldn't face you? So I think bringing up the netting jurisdiction helps. And yes, it might help the Islamic banking more than the conventional, even though it should not be the case, if that answers the question.
Thank you. Anyone else has any questions? All right. Gentlemen, thank you so much for making your way here. Thank you for joining us in the panel, and hope to see you next year.